and welcome to the most important interview for financial markets. I have with me the Governor, Reserve Bank of India, Mr. Sanjay Malhotra. The Governor who has stunned the market in the last 6 months by giving 10 trillion rupees almost in liquidity, by cutting the repo rate by 100 basis points, all in 6 months, cutting the CRR by 100 basis points, again in the last 6 months, effective September. With all this, the market still wants more, like Oliver Twist. So, Governor, thank you very much for your time. First up is the Tuesday inflation number, June inflation number, coming in at 2.1%, lower than most market expectations. And now the April, May, June number is 2.7. Reserve Bank's forecast was 2.9. And on the street, the expectation is July will be 1.8. And the full year will be way below the 3.7 that Reserve Bank forecast, probably close to 3. Therefore, does it open up space for a rate cut? In fact, for rate cuts?
See, we are in a neutral stance, as you are already aware. So, the MPC, this is of course, first of all for the MPC, not for me. But you are right that the MPC has decided to change the stance to neutral. And so what this means is that we can go in either direction. It gives us the flexibility to move upwards or downwards depending on how the outlook, more importantly, rather than the current data which we have now only for Q1. Rightly you have said that it has come down. But how is it going to look like going ahead? And we do our own internal assessments. Whether it will be 3%, I really don't know, because those calculations we are still in the process of doing them. We will certainly come out with our latest projections. And the MPC, as always, will factor in the evolving situation, the outlook, and then therefore take a call as to whether the economy really needs what kind of a policy rate it needs. If the inflation is lower, the forecast therefore, the outlook is lower, the growth is lower, certainly the policy rates can be cut, but that is something that we have to wait and watch.
Okay. What is the trigger for a rate cut? Will it be lower inflation or will it be lower growth?
It's a mix of the two. It's a mix of the two, really. One can't really say that it is inflation which is more important than growth numbers. For us, as you are aware, it is primarily we look at price stability. That is our core mandate. That is the primary objective. And then we look at growth also. Both are equally important. And I would not say that, we would give more emphasis as of now to either numbers. We also need to be aware of the composition of the inflation, and especially when I say composition, I mean, the momentum and the base effect. Of course, core and food is another way of looking at it. But how is this inflation going to look forward in future? That will be more important rather than the 2.1% or the current inflation that we have.
Inflation is likely to be around 3%. That is well below 4% for practically all of 2025 calendar. And that makes it 2.5 percentage points, 250 percentage point real rate. For a good 9 months, from March, it is at 3% and it will be that way all the way till December. More importantly, sir, now the WPI has come in negative. So, that also impacts manufacturers, that level of deflation. So I'm asking, when you say neutral, is it one third hike, pause, cut, or will the percentage of cut be a little more given the kind of deflation number we are getting in WPI and
stuff? See, firstly, let me say that monetary policy, as I've mentioning, it is forward looking. At the point of time when the MPC met last in June, The inflation numbers, even though at that point of time were about 3% or so, right? But forward looking was 3.7%. So even if you want to give, weightage, again, going back to your question of this real rate of interest or neutral rate of interest, even if you were to give importance to that, which I'm not saying is not relevant at all, of course it is relevant. The difference was about 1.9, it's less than 2%, it's very much, within the band. And neutral, as I've already mentioned, it doesn't mean that we can't, move up, move down. We can certainly, move down. But for that, yes, the outlook has to change. Whether it will go down to 3%, I don't know. We will let you know.
The average of the street is 3.3 now for the full year, FY26.
Yeah, so we'll be coming out with our numbers. You're right, there is an expectation, correctly so, that the inflation will be perhaps, for this year, not 3.7%, but lower than that. That's certainly on the cards. And if that happens, the monetary policy will have a look at it and take a call. I don't want to preempt, what the MPC is going to do, but I'm only emphasizing that we will continue to look, we'll continue to be data dependent and continue to look at the incoming data, and especially, the outlook, and the situation so warrants, we can move either ways, which can, even be downwards.
Okay. So what will be the triggers you will watch out for to align the call rate to the repo rate? As you said in the Business Standard interview, there have been many times when the call rate is below the repo rate when you want transmission. What will be the triggers you will look at to align overnight rate with repo rate?
No, as you have mentioned, the target for us is certainly the call money rate. It has to be certainly, within the corridor, which at present is 5.25 to 5.75. And while we would like it to be, at the policy rate, in times of transmission, and transmission is happening. I mean, I'm happy to note, I reviewed the figures recently, and I would like to inform you, transmission is happening well. On new loans, there is a 24 basis points of transmission already till May. Okay. We have data only till May, which means only 3 months. In 3 months, since we did the first policy cut on fresh loans, we have a transmission of 24 basis points. On outstandings, we have a transmission of about 16 basis points. So that's quite good. So we'll keep balancing, our need for transmission and, of course, our target, how to align it. We already did, VRRR starting end of June, you are aware. It has brought up the call money market rate as I speak. Morning, it was 5.44, so it's quite close.
Yes.
Friday it closed at 5.45. And so our effort will be to, while, maintaining it as close as possible to the policy rate, it should also help us in the transmission.
Well, from market questions to bank questions, ownership of banks. You said that there is a review. Personally, what is your opinion? Would you want at some point conglomerates also to have banking licenses?
This is a very, very old question. This is a very...
It doesn't go out of fashion, sir.
Yeah.
Or out of the desires of conglomerates.
Yeah, so I think this question primarily comes from the fact that some of the corporate groups, they have deep pockets. And the banking industry, at the same time, needs capital, whether it is the existing banks or whether it is, the new banks. So that's certainly, a valid question. But at the same time, let's also keep in mind that conducting business, financial business, and real economic activities within the same group has a conflict of interest. And I would say, that this counter argument is equally valid and equally relevant, even today.
Okay, you were talking about that you will review bank ownership rules more in the instance of
Yes, we are of course reviewing it and seeing, as to what can be the other ways, means to raise capital, who can be other participants, because you have the small finance banks, you have the payment banks, you have the cooperative banks. How we can tweak, change some of these, the foreign banks. How we can make some of the changes so as to be able to attract more capital for the banking industry.
That's why I brought this question, really.
Yes, yes.
There are two foreign banks wanting to buy stakes in Indian banks. SMBC, the announcement from Yes Bank has already come and they are awaiting your permission.
Right.
Now, hitherto RBI had only given permission to foreign banks to cross that 15% when the bank was in trouble, like in Catholic Syrian's case or in Lakshmi Vilas, where of course DBS bought the whole bank. Now, Yes Bank, you have the odd situation of State Bank having, its own banking license and owning 24% in Yes Bank. So, RBI probably wants that to end. But in the case of RBL, we understand NBD is very interested. So, what is, first of all, have the cases come to you? And more importantly, if you are going to give permission, like even IDBI is apparently, the interested parties all want 26%. So, as a rule, will you want to change from 15 to 26?
See, as per the FDI policy, the foreign banks are allowed up to 74%.
Yes.
All right. And the foreign banks can actually start business in our country as even up to 100%. So that's even more than 74%.
But they don't want that. They want to get into, established Indian banks.
Yeah, so, Indian promoters are already allowed up to even more than, 26% stake, to be brought down to 26% stake within a period of 15 years.
Yeah.
Voting rights, of course, because of the Banking Regulation Act, cannot be, even if the share financial stake is more than 26%, cannot be more than 26%. So even foreign banks can certainly have, 26% stake, economic interest, voting rights.
Yeah.
There should not be any difficulty in them having, up to 26% stake in a bank, in an Indian bank.
Okay. No, it's just that until now it was only given.
They have not come. So we have not, your question as to whether some cases have come to us for having 26%, they have not. But if they come, we will certainly, we are already reviewing the policy, as you are saying. There is some kind of, clarity is not there, some ambiguity is there, as you are saying.
No,
We'll try to bring in, these clarifications and bring clarity in these guidelines.
Okay. And no, until now at 15%, it was kind of a hard stop. And case by case, Reserve Bank was allowing. So I'm just asking if that 15% hard stop.
As I mentioned to you, for foreign banks, they can go up to 100%. So if you don't allow them even 26%, that kind of seems to defy logic.
Fair enough.
So we will be okay in allowing them, whether it is on a case-to-case basis, whether it is as a general matter of policy. These are matters of detail, which we'll work out.
Let me come to the final growth picture that you have. The e-way bills have dropped a bit. GST collections in May was excellent, June was unimpressive. Car sales are unimpressive. And the global uncertainty is not going away at all, if anything compounding. Would you worry about growth at this juncture? Is this 6.5 also possible?
Well, that's 6.5, is our latest number. Yes, there are mixed signals, high frequency indicators, more or less, they are aligned with our projections. We'll again, revise them in case needed. We will again reassess them, review them for our monetary policy, which is due in another 15-20 days. Urban, yes, you're right, air traffic is subdued. Passenger cars are again, that is subdued. FMCG sales, of course, are doing well in the urban areas as well. There is robust growth of consumption in rural areas.
Yes.
Monsoon is favorable. We are hopeful of, a good trade deal. Hopefully, that's in the final stages. Let's see. Let's keep our fingers crossed over there. There is good optimism that we see in our surveys of consumer surveys that we see. We'll again reassess the situation on the growth front.